Hello, everyone. I am Kim Hughes, and this is the Tuesday, January 2nd edition of Sane Crypto Live. If you are a replay listener, I am really glad that you are here. I appreciate you spending a little bit of time with me, dropping in to see what we are up to. Today's topic is why investing in Bitcoin specifically, and cryptocurrency more generally is a better idea than you think. So just a little something about me very quickly for those of you who don't know who I am. Again, my name is Kim Hughes. I like to say this is not my first bubble. I am not one of the crypto kiddies. I am, in fact, a 20 plus year investment industry veteran and critic. I am an author, a speaker, and probably most germane for purposes of this conversation is that I am the inventor of an investment method, which I went on to turn into, by the way, a retirement investment method, and went on to turn that into an award-winning investment firm, which I sold last year, early 2017. So, before we get to, deep dive into this, why investing in Bitcoin may be a good idea, let me just pose the question of the day, if you would, and if you will write your answer in the comments below. First is, where are you from? But then if you made some extra money from Bitcoin, what would you spend it on? So again, just I'll wait. You can just put that in the comments below. I will circle back. Also, if as we're going along, you have any questions at all, I do come back, and no comment left behind. I will come back and answer them as long as they are respectful, of course. So now on to the topic at hand, which is why I think that investing in Bitcoin is a better idea than you might think. And I'll tell you where the idea for this topic came from. Last night, my husband's sister and her husband, so my sister-in-law, I guess, and her husband, were passing through town, and they stopped in for dinner, and we were sitting around, and of course, as the topic always does these days, we started talking about Bitcoin and cryptocurrency, and I think she and Cal are pretty typical of the mainstream modern, over the age of 40 American, and it piques your interest, and yet you're just, based on everything that you read, not sure that it's a good idea to invest in. And in the course of that conversation, the point that I was making was that actually what some view as negatives, and in fact what the press often portrays as being negatives, are actually positives. So, the first thing that always happens when Bitcoin comes up is somebody, asks something along the lines of, or suggests something along the lines of that, well, this surely must be a scam or a hoax. And as the inventor of something, a new way of investing money, I've always been fond of a quote by Arthur Schopenhauer, who said, all truth passes through three stages. First, it is ridiculed. Second, it is violently opposed. And then third, it's accepted as being self-evident. So, you may, hey, Jose, nice to see you here. You may, some people suggest that cryptocurrency isn't real, right? Because there's no coins and dollars associated with it, but the fact of the matter is, it's just as real as the money in your bank account. The money in your bank account is merely a ledger, an entry in a ledger, and that says that bank, in fact, a fractional reserve system, who actually holds less than what's on their ledger, because they lend it out, will will pay you that money when you ask for it. Okay, it's the same thing. Blockchain, which is what Bitcoin is based on, is simply a distributed ledger where that ledger is not kept in a single bank but across hundreds of thousands of computers all across the internet. Secondly, I would point out, as I did last night, that these days follow the money, right? Trading desks are being set up at major, or have been set up at major Wall Street firms. Hedge fund managers are managing portfolios of cryptocurrencies. Billionaires are investing in them, and these people are in the business of making money, not losing it. If it was a scam or a hoax, then I can promise you those people would not be in it. And then, that said, the good news, right, and one of the reasons why I am willing to invest in it is that it's still, even though you have some institutional money coming in, it's still early enough to have a reasonable expectation of continued price appreciation. So my view is that bubbles, at least in the early phases, with all their volatilities, are actually an opportunity. They are an opportunity to shorten the curve. And what I mean by that is, at normal market rates of return, anywhere from 5 to 10%, which is, for example, the rate of return of stocks over time, it will take anywhere from 8 to 10 years to double your money. Okay. Well, if you look at this chart, let me share my screen with you. You can see that Bitcoin started the year 2017 at roughly 800 and went to a high of 20,000 before settling somewhere around 15,000 at year end. So 800 to 20,000 this year alone. Now, it could go to zero tomorrow, and eventually this meteoric rise will cease, for sure. Okay, which is why I call it an investable bubble. We have to be very clear about the market cycle that we're investing in, right? However, this is the way I think of it. If I put $50,000 of a $2 million retirement portfolio in, if I lose it, yeah, it's gonna hurt a bit. It's gonna make me sad, but it's not life changing. If, on the other hand, that $50,000 becomes 300,000 or 500,000, well, in the grand scope of things, for me, that's meaningful. Now, it's that very upside downside skew that I think makes it so compelling. And there is, in fact, an analysis that has been written and published recently by a gentleman named John Pfeffer, former partner at KKR, which has been circulating the Wall Street trading desks over the last couple of weeks, that, and it's just one man's opinion, but it's a very cogent argument and cogent analysis of Bitcoin as a store of value that puts that upside downside skew at -1 to 80 with a positive expected rate of return, which, as he notes, is very rare, very, very rare in the investment world. So I'll put a link to that paper in the notes. You will be able to find that at sanecrypto.com/good idea, all one word. sanecrypto.com/good idea will be the link to that paper if you're interested in it. And so that, that's the first reason. Second reason, rather. The third is that it's an opportunity to get involved and learn about a technology that will, in fact, shape our future. Blockchain will be up there with, AI and gene editing and electric cars, as certainly, I think, ahead of electric cars in terms of the disruption and shaping of the future. So, dare I say, getting involved, even at a small level, you can think of it as fun, because I don't believe investing should be fun ever, but I do think us old fogies sometimes have a tendency to get a little bit closed-minded. It's familiarity bias at work. If you're not familiar with familiarity bias, our brain creates shortcuts in order to make decisions. Those are called heuristics. There are something like 50 uh, um, behavioral biases, or emotional biases rather, that have been cataloged by behavioral economists, and familiarity bias is just one of them. Familiarity bias says that the things that we are familiar with, we value more highly, and things that we are unfamiliar with, we automatically value less. And so as we get older and farther away from these technologies, we tend to value things like coins in our pocket more highly than some newfangled blockchain thingy, right? So think of it as a way of keeping your mind young. And I would close my thoughts, but with another quote. George Bernard Shaw says, "The reasonable man adapts himself to the world. The unreasonable man persists in trying to adapt the world to himself. Therefore, all progress depends on the unreasonable man." So I will, let me just see what, I'm going to check in here on what Jose has to say here. But before I do that, let me just say, I do these broadcasts every weekday at approximately this time, somewhere around roughly 10 a.m., give or take, Eastern time in the United States. If you would like to be notified of when I go live via Facebook Messenger, then just go to sanecrypto.com/live and then type the word live in Facebook Messenger, and I'll have our bots sign you up for notifications when I go live. Of not just that I'm going live, but also what the topic is going to be, so that you can decide if it's something that you enjoy and would like to learn more about, or would like to discuss with me. Also, if you did find this helpful, leaving that in the comments below, along with any questions that I can answer, thoughts, comments, etc. That tells Facebook and or YouTube, depending on where you're watching this, that it's valuable content that they should show to more people. So that would be really, really helpful. And again, you can get the show notes with links to resources mentioned, as well as the price graph that I have up on my screen. Actually, let me flip back. As well as I'm going to put a tool that calculates a spreadsheet that'll just show you how long it takes for your money to double at various rates of return. All of those will be at sanecrypto.com/good idea. All one word. Okay, flipping over here, Jose from Spain. And I don't want to spend my Bitcoins. I want to keep them long term, because I think their price will continue rising. I prefer to speculate with some other cryptos. Fair enough. I think that's a good point. I think mainly the point that I was making was, I think that the reason to be invested, although, by the way, Jose, I am, as you may have seen, I am not a believer in hodling. For those of you who don't know what that means, it's an acronym popular in crypto circles that means hold on for dear life, which has been morphed into hold forever, never sell, which I don't believe. I believe this is an investable bubble, and that there are very real points at which you should either take profits and or exit. But that aside, the point that I was really trying to make was, relative to equities and bonds right now, stocks and bonds, these sorts of returns do have the opportunity to put a little extra jingle in your pocket. And whether that's to goose up your retirement savings, or in my case, buy another polo pony, whatever it might be, that really is, I think, that upside downside skew right now is the reason for the average person, including those of us who are older and getting close to retirement, and therefore might feel like it's too risky for us to put at least a little bit of risk capital into this market. All right. So, but thank you for your comment, Jose. Absolutely, point well taken. All right. So, Just want to close with disclaimer. As always, everything that I have said is for educational purposes only. Nothing should be considered investment advice. Past performance, mine or anyone else's, is no guarantee of future results. All investments involve risk, especially this one. Hence why I don't believe in hodling. It could go to zero tomorrow, could go to $1 million tomorrow, could do both. So do not, under any circumstances, invest money that you can't afford to lose. All right? Okay, thanks for listening, and I will be back tomorrow, Wednesday, with another installment of Sane Crypto Live. Until then, remember, y'all, that trees don't grow to the sky. I'm Kim Hughes. Now, go forth and conquer.